What's up guys, it's Greeny here. Welcome back to another video. In today's video guys, it's a special edition. I recently got asked to give a tutorial on trading, on TA, on Fibonacci levels, on a range of different things that I look for when I'm looking at meme coins or altcoins or future trades. And that was exclusive to the Badoggo community. So obviously this will go out to them first before obviously then being a member only video. And then obviously it'll go out to the public. So I hope you really do enjoy this tutorial, and let me know in the comments down below if you have any questions or any clarification on anything at all. I'll be more than happy to help you out. Lastly, obviously, if you want day-to-day analysis, trade calls, or education in this space, guys, do check out my trading group, which is in the description below. And obviously, if you'd like to support the YouTube channel just a little bit further, you can become a YouTube member as well. Here's the video. Well, welcome guys to Greeny's TA tutorial. So the first question really centered around TA, specifically around the Good Day token. So I take the Badoggo community through the TA, how I use TA to effectively work out bullish structures and then work out bearish structures, and then dive in a little bit into Fibonacci levels and those sorts of things. Yeah, so Noodle's asking a good question. So where do you draw the fibs from? So a couple different ways you draw. The fibs. So generally the fibs with meme coins, I like to draw from 0. So obviously this is a Dex Screener chart. BullX obviously has the full chart, but you draw it from 0. So you get as close to 0 as possible. So that's 747, and you draw it to the top there. And then that's the levels that I like to sort of keep an eye on. And generally you'll see tokens sort of do a big pump up first, and then slowly come back down all the way often to this sort of red area down here with the 0.786 to 0.886. Now, as you can see, like volume is starting to decline as well. So that generally shows me that here, if I just clean this chart up a little bit more, we're probably going to maybe break this support because volume is maybe slowing down. But we're also kind of like, we're doing something like this. So the way that I draw my charts is from lows. So whether that's wicks or whether that's from candles, you draw it from as many touches as possible, both on both sides. And as you can see, this is probably more of a bearish symmetrical triangle, but it doesn't necessarily mean that it couldn't break up. But we are seeing volume decline, which is like pretty standard for a meme that's been out for, how long is this now? 20 minutes? Yeah, half an hour. So yeah, steam does run out, buyers do start to run out, but then this is where I like to potentially play. So if we do break down here, which more than likely we do based on macro conditions at the moment, based on what I've seen across the market with a lot of memes sort of struggling to run a lot higher, I then start to look to buy in that region there, or in this region ideally here, because your risk to reward from those sorts of levels are far superior than aping into a token up here, okay? Or aping even here in your golden sort of ratio, guys. So for me, like if you just do a simple risk to reward, so this is just your long, you would obviously have your stop loss below the 0.886, and then honestly, you can target this sort of 382 as a swing trade back up. Or if it breaks out to a new all-time high, which is ideal, like I think this one probably does have a lot of steam if we keep pushing it on Twitter and those types of things as well, then look at that ratio. It's a 3 ratio, risk to reward ratio. So in other words, if it was to go to my stop loss, it would only lose a third of what the price position is if it actually goes to my top target at 0.382. So that's kind of how I like to trade those sort of swing trades if you aren't in the trenches and you miss the first sort of ones. And what I like to do is come to Dex Screener and look at top volume up the top here and just look at the charts and find a chart that I like at potentially looking for a breakout here. And you'll find that a lot of tokens, if they are strong with community, they probably only go to that level there. But if they are a little bit weaker and they do maybe die off with a bit of steam, the narrative maybe wears off, whatever it is, they often come all the way down here, set in maybe a double bottom, if not just one. Okay, they consolidate, and then they likely break out of a sort of trend like that. So that's worked like pretty consistently for me. I'm going to say now for a year, guys. And that was on Ethereum, and now on obviously Solana Memecoin. So I hope that shows you the fibs. The second way you can draw fibs is from a swing. So the low here to the swing high. And as you can see, where did it respect? It respected off the 0.786. So from 0 to the all-time high is the first fib, or from the swing low to the swing high. And as you can see, it respected there, and that's why we bounced. Now, Fibonacci's are based on psychology, they're based on mathematics and all those types of things. So I hope that answers your question. Question number 2 touches specifically on how I use Fibonacci to find those second pumps. So say you're not in the trenches and you don't find a low market cap between that sort of 5K to maybe the bonding curve at 60, 70K. You can often find a lot of tokens, a lot of meme coins love to retrace all the way down to their 0.786 level, 0.886 level, and sometimes a little bit higher in the shallow fibs at the golden pocket. And essentially what I show in this tutorial and answer this question is how I use that to essentially make consistent swing trades on meme coins if I have missed that first initial pump. But like you want to see like, oh, someone just dumped so much. But this is what I mean. Like this is what I was saying before, like this is opportunity, right? So red, and this is like a consistent thing that I've done in the bull market too, is buying fear during a bull market. So if we draw low to high, so we only hit this. So I'll ape more. So you'll see this live if it does happen. I'll buy more down here. And often what I will do is come to, which I've already drawn my fib here too. Like I'll come to Bull X, for example, or Pepe Boost is what we were talking earlier in the Bodogo chat too. Pepe Boost is way cheaper than Bull X and Photon, so always be aware of that. So I'll put a buy order probably here, guys, at about 49K. If it hits, amazing. If it doesn't, so be it. But at least my risk to reward at that sort of entry is a lot better. So I come to Pepe Boost. I've just pasted the contract in there. I come to limit order over on the side here. Buy at a specific price. So it was, if I just reply to this, it was 0.000049, and then I'll put like 3 sol. And then bang, if that hits at any time in the next 24 hours, it expires, as you can see here. Oops, it expires in 24 hours. So if you do want to go back and cancel that, /limit, and you come in here and you can just cancel that, close all. So there's a bit of behind the scenes on what I like to do as well. If we do hit those levels. So this is good. Like this is healthy price action. You never want to see anything just go straight up. You do want to see it sort of have ups and downs because that is healthy price action. So yeah, the Fibo option is over on the side over here. So this one over here. It's the first option, the first tool over here, Fib retracement. You can draw it a couple of different ways, right? So if you have, like obviously the retracement is downwards, but if you would like Fib targets and extensions, you can obviously take it from the top to the swing low. And then that's how I did those extensions earlier for Solana, targeting that 686 level. So this could be, if this low holds here at 67K, then up here at 280K is where I would maybe look to scale a bit of profits, or that would be like a sort of level that I'd have an eye on. And then obviously 2.618 is at 415K. If this is the low, which it might not necessarily be, like if I draw support and resistance based on what I'm seeing right now, if we come in here, let's delete this other line. That's the resistance that you're currently seeing on this token. And this is this is where I would have got bearish if I was in this token without, obviously, with you guys and looking to hold this a lot higher. See how it didn't make a higher high? It is technically a lower high there. So that's your first bearish sort of structure change there, right? Is a lower high on there. So that's technically like even a double top as well. So that was bearish. That's where I would have looked to maybe scale some profits as well. And you want to scale into either a green candle or during consolidation, not when it's dipping lower, because bots generally do track you and those types of things. So that's just that. But to draw the fib is from the top, so the all-time high, to the swing low. So that's this low at here. And then that's your extension targets if we obviously do break out from this trend and pump a bit higher. Here, I'll show you my fib settings, guys. How about everyone can follow my fib settings? Because then that way it's nice and clean too. All right, so this is what I like to do for fib settings. So you pull it up over on the side. You can click on it. So I'll just show you again, right click and either settings, or up here, you can click settings like that. Come to style, and this you can screenshot this, guys, so you can have this as well. But essentially what we're looking at is the 0 to the 1 level in gray. Shallow fib is 0.382. A lot of altcoins, if they're in a strong bullish uptrend, only ever really retrace to the 0.382. with a way higher market cap. Meme coins, they sort of love to come back down and really retest the lows down here at 0.886 and 0.786. The golden pocket is the 0.5 to 0.618. So that's why I make it yellow, to make sure it's nice and golden, and then red for the 0.786, and there's this one here, the 0.886. And then obviously extensions, I just run with those. There are a lot more fibs as well, but you can dive on and learn about them if you want. But the 618 is generally a reliable extension for those. Those are your number settings on the chart. If you scroll down a little bit further, I generally turn off the background, so that's why there's no color in behind there as well. I do have prices because it helps with meme coins, because it then, like you just saw before with Pepe Boost, I know what levels to set in some buy orders. Levels of values, so percent, you want values over percentages. I like to have mine extended on the right. As you can see, price is on the right because price hasn't gone there. So that way price action isn't going to go over the numbers. It's easier to read. I like to make it on the middle. You can put it above the top or the bottom. But again, it's just easier to read when it's left to right like that. And then lastly, I drop it all the way to the lowest font size because then that way it makes it just super easy to see on the screen. It's not taking up a lot of space. And then the last one is I turn trend line off. I turn that trend line off up the top as well. So those are my settings. Feel free to copy them. Yeah, Guapo nailed it. Yeah, T Ward also is a legend with this stuff as well. Yeah, so Slevo asked a really good question. So you're using Pepe Boost rather than BonkBot. Yeah, so I've used Pepe Boost now for probably 2-3 months, if not longer. And it's by far the fastest and the most reliable, and also the cheapest bot that I have found reliably. I still use BullX, like you saw before, to track early memes. However, what I like to see is Pepe Boost is just reliable and it's cheaper. If you dive on chain after some transactions, you will notice the difference between BullX and something like Pepe Boost. So yeah, let it, and if you I'm not here to shill my stuff, but it is, if you want to check that out, it's just on my Twitter profile under my link tree. You can sign up there, and I do have tutorials on this on my YouTube channel as well. Now that we've done that, we're starting to see this trend sort of break. It technically did make a slightly lower low. Again, we're still only on the 1 minute chart. So as soon as you can get more sort of price action, it's always good to sort of zoom out. Perhaps the BullX is a better chart because it's got everything. So here we go. Yeah, so this is a bit of a better chart. So we're still in this downtrend. And this is what I mean. We have tried to break out, so we'll just see if this is a breakout or not. You want to see volume come in. So this is where, if volume doesn't step in, then that's it. Essentially, if this moves up, it likely comes back down because there's no new buyers coming in and sort of helping volume increase. So volume does matter with breakout trades like this. Whereas something like the level that I set here for my buy on the Fibonacci level at 0.786, that doesn't necessarily mean that I need volume. And the reason I set it at 49K, I think it was to front run other bots that likely have orders set exactly at the Fibonacci level. So I do like to front run it a little bit because sometimes you do see coins only sort of come to this level here rather than retesting all the way down here. And the same goes for the 0.886 too. Sometimes it pays to put an order there rather than right at the bottom. But yeah, we want to see new buy step in. And obviously, I haven't, because I've been here, but I haven't been checking the socials. So I'd come, this is a standard process. So yeah, you're seeing, okay, so followers are going up. It's always good to see mutual followers on there. Then I want to see the engagement as well. So yeah, this is at 1.6. Good day. And then, yeah, so this is good. The boys are pushing it out. Jassim and Mr. Yellow pushing this out. So that's great. Love to see it. So yeah, that's sort of the process I go through, and then that's sort of how I keep tracks on what's happening in the charts as well. So the third question, guys, focuses more on how I find early coins, early meme coins in the trenches. So obviously I use Bull X, but like I've said in the tutorial so far, I use Bull X's UI to find those tokens and to check out red flags and then to check out green flags. And then I use Sol Scanner as a second security safety check on Telegram. But ultimately I'm looking to buy them on Pepe Boost because it's fast, it's consistent, but it's way cheaper than Bull X. And do your due diligence to double check each transaction fee using different bots and use the best one that you think suits your trading. So this is why, like as Easy kind of alluded to in the stream the other day, you do want to have filters, but you kind of don't. So if you don't have filters on Bull X, then it means that you can see everything that's happening, which is a good thing, but also a bad thing because you do obviously see a lot of rugs. And if we were to like look at something here in a second, likely at the moment, particularly with macro being quite bearish, likely that does dump within like 5 seconds, right? Or 10 seconds or within a minute. So for me, what I look for on Bull X with these early tokens is a few of these factors. So firstly, I always have, which I don't currently have ticked on, but I like to have socials because with socials, it just means that like we've just seen with ourselves, right? You want to have a community. You want to have, I see that it's dumping. Just a little live update. Hold up, let me just change this just to reflect the fib from 0. Then we'll come back to that. So from 450. So my buy order here at the 786 likely will get bought up very soon because we're still in a bearish trend here. Again, I'm not selling anything. I'm buying more. That's ideally the play. But anyways, back to here. So what I'm looking for is a lack of red flags, right? And so it's more about spotting the green flags and limiting the red flags. So socials allow you to see that tab. As you can see, it's going to limit the amount that come through. There we go. Yep, so it comes through. This one here. So I click on cat face. I have a look. It takes me not to an X profile. It takes me to the Know You Meme page. So it takes me to this page here. So like whilst that's okay, that's not what I want to be seeing. I want to see an actual community looking to potentially doing that token. So if we go into it again, like there's no no rats on here. The dev doesn't own too much of the supply. Now there are quite a considerable amount of top holders. What you're seeing is that this market cap has moved up. The volume is really good. You've got new holders stepping in too. So this would be one that I would keep an eye on. So I then come in here. I apologize. I'm gonna have to close a couple of tabs. I then come in here. I then obviously dive down to the 1 second chart. The dev has sold, so just to double check, the dev bought 51 million and the dev has sold, show me. Yep, so the dev's fully out. Now, again, we just looked at X, that took me to the Know You Meme. And what we're seeing is that the jitters are coming out. So you want to keep an eye on holders. So it's at 26 now. I dive into holders really quickly. I have a look, are there any rats or any snipers? There's one sniper who only owns under 1% supply. There's another sniper who has likely taken profit as well. So that's green flags there across the board. You now have seen holders kind of go up, which is good. I know, again, people are like, oh, TA doesn't work, but this shows me right now, this is the level that we want to be starting to break out above for me to see strength in the chart. You want to see volume start to increase, which is slightly happening. Again, holders is up to 30, which is good. You then come over here and you click the pump fund link, and that opens you here. And this is a little quick way that I like to check whether the dev has done any rugs before. You click up the top of the pump fund token, you go to coins created, and this particular wallet has never created a token before. Okay, so that's good news. We come back here, this chart looks okay. I might have bought that if I wasn't obviously educating right now. But again, like it's super risky. You'd have to keep an eye on top holders. So you come to bubble maps, you take a quick look to see what the percentages are. So let's have a look. So yeah, we've got quite some high percentages here, which is like, if you tally this all up, it is quite high. But again, I then run it through Sol Scanner. Just again, it's always good to have a second opinion. So if I come to, where am I? Sol Scanner, and I paste it in there, then it's going to show me a few extra stats. So as you can see here, it was bundle snipe 5.1% of the supply. Okay, and this is just Sol Scanner, Sol_scanner bot on Telegram. It's just the second one that I like to use beside other safety measures. Top 10 is holding 17%, so that's not too bad. Anything over 20% is usually a red flag for me. and then we come back to the chart. Does someone want to mute? Yeah, easy. And then you come back to the chart, and yeah, so it's just dying off. And like the reason a lot of these are dying off at the moment is because it's just like so, like people are bored, and same as good day. It might have hit my buy order, but like we're seeing a lot of like tokens not, and sometimes like the better trade is to not take any trades at all, because the market right now is obviously what do you call it? Let me just mute this person. All right, there we go. The market right now is obviously macro bearish, so you've got to remember that at the end of the day, essentially, yeah, good day, buy, likely hit. Yeah, easy, thanks, T Ward. So at the end of the day, you do have to consider macro environments and macro sentiment, because if people are bored, if people aren't willing to sort of throw their money in more of a risk sense, then likely they're not going to do that on the meme coins either. So this is why this one likely still hasn't continued. And what you do like to see, whilst on our side, we wanted the dev to get out, it generally is better if the dev does hold some of the supply, because then they actually believe in the token pushing it up. But yeah, I suppose this is where maybe a CTO would come in. But this one's obviously gone to zero at 4.8K. So I hope that gives you a bit of insight into the red flags. Again, that video is on YouTube. I probably go into a little bit more detail, broadly speaking.
So question number 4 focuses more on why volume is so important with these breakout trades, and how I find and how I use the Fibonacci levels to take aggressive swing trades, often making as little as a 2x and often a 3x by just trading between the Fibonacci levels.
So what I want to see here is starting to see a breakout in volume and a breakout in chart. So so this is why fibs and setting that order. So if I come back to Pepe Boost, yep, here we go. So just to show you, this limit order executed successfully at, yeah, so slightly above my level of order, which is fine, 50K. I'm happy with that level for 3 sol. So I now hold it there as well. So if I come back to this one, as you can see, like 50K is a little bit higher than I would have wanted, but at least now I'm in, and hopefully consistently I've seen a lot of tokens sort of do this and move up from there. And what you want to see is volume step in and volume be sort of irregular, right? So what I mean by irregular is that you want to see big green candles come in that are taller than the candles that are here. That shows me that there's strength coming in. If these candles start to be bigger but red, that's red flags, because generally, even though we might break up here, likely we do reverse, because holders and sellers are starting to jeet into the chart. So if I do take a swing trade from here, right, and again, just to show you how profitable that can be, from the 786 just to the 382, guys, that's a 2.8x. So that's why it can be super, and that's why I focus more on that. If you have missed a chart like hit this, rather than aping in up here, okay, or aping up here, you want to have good risk to reward entries. And I talk about this like quite often on stream, in my trading group, all those types of things, because if you don't have good risk to reward entries, then you don't know where to take profits, and you don't know where to cut a weak trade. And invalidation is so important at the end of the day, because you lose so much. Traders lose a lot more money because they don't cut a trade rather than making profits. So it's just as important to have invalidation levels. So for me right now, I could probably say that my invalidation would probably be a break below the 786 at 43K. So again, I can come to Pepe Boost, and if I go to assets and I spit that in, that's the other one. So I got to click on the right one. And I click this. This has all my information. So I'm up 20% on that swing trade from the Fibonacci limit order that I set. Obviously, Pepe Boost is also great because it shows you these green flags as well, like LP burnt, renounced, freeze, revoked, all those types of things. Top 10 holds. That is quite high. So someone owns a lot of supply. But essentially what I'm looking at here is now I can set some other limit orders. So I can set a limit order, and I can have a stop loss here. I could say stop loss, like sell 100%. So come back down here, reply. I could set 0.1234 at, what was it, 40, it'll go to 42.5 level, and I want to sell 100%. So then I have a stop loss below that Fibonacci, as you can see here, executed market value at 42.4K for a loss of 0.5 Solana. But losing 0.5 Solana is far superior to losing 3 Solana. So that's why it's so important to make sure that you have invalidations, but you have good entries, because that's what you want to see at the end of the day. So I hope that makes sense as well.
Question number 5 focuses on a common question. Is TA worth it? And so I break down the difference between two types of trading that essentially I see professional traders do. And they are essentially fundamental trading and also using technical analysis on the charts to trade different levels. Now, I use a lot of both. I focus more so on the technical analysis side, which you've obviously seen in this tutorial, but also you've seen on my Twitter page. But I definitely still have an understanding of fundamental strength behind my specific trades that I like to take. And I break down that specific factor with how Easy bought Solana at $8, and then I bought it at $17 using both fundamental analysis, but also technical analysis at that higher low.
Yeah, great question. I'll just put the Pepe Boost link in the chat for a few people have asked, so there you go. And I do have a tutorial on YouTube for that. But yeah, it's a great question because a lot of people, like you would see some of the best traders on the timeline, right? So I'm talking OSF and Mendo, right? They have fundamentally some of the best execution and understanding of global liquidity, of trading, of and Raoul Paul, you could throw into that conversation as well. He's more of a chart person than OSF and Mendo, but those two, like trading works in two ways generally. It's fundamental. So what I mean by fundamentals is, let's take Solana. So it was oversold. There was a lot of execution still happening behind the scenes with the devs. People were still using the DeFi. People were still using the chain for NFTs, etc., etc. So Easy, for example, made a fundamental trade at $8 last year to get into Solana. Whereas I made a technical analysis trade at $17 to get into Solana mid-year last year because it was bottoming out. I might pull that up to show you. But essentially, like I know you asked specifically about meme coins, and I will stand by this until it doesn't work for me anymore. But TA works consistently with showing you just really simply bullish and bearish structure. So for me right now, if I just get rid of all this stuff on the chart, which we are breaking out from, again, look at that buy, guys. Like that's what I mean. Like I'm up 92% on that buy. So that's why I do it. So I'm already nearly made a 2x on that back. But what I like to do is like essentially, this is, as you can see here, this is bearish structure until it breaks the trend. So we're coming down. So we're setting lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, until we have now set a higher high, right? And we're setting lower lows, lower lows, lower lows, lower lows, lower lows, and then we finally set a higher low there. So I'll just make it nice and clear. Let me clean that up. So a higher low there. So really simply look for lows and highs, but if you can just draw a trend line, it shows you the direction of the chart. So for this one, it was going down. So that's in a downtrend, right? Whereas here, if I get rid of these two, and TA does work on any type of meme coin. So if I do that, okay, if I do that, that's your bull trend. So bull, we come back often. As soon as you start to deviate away from support, which is support here, okay, the support is that yellow line, we always come back to retest it. Ideally, you want to see it bounce because that's bullish, okay? We come back, we retest it, we bounce, we came back, we broke it. And the first candle that shows me that we do have, and again, this is on the minute chart, we didn't break back in it. So it broke below, but what I would like to see is maybe do that, and that shows me bullish continuation. But what we did see is that it broke back down and it retested this support and has now made it resistance and then broke down further. So that's a clear example. So really basically it does show you levels to, again, cut. Like, so for example, if I ape down here at 16K, this is where I cut. I cut there because it probably likely continues in this downtrend. And then I use the Fibonacci levels from 0 to the all-time high to find those buy orders. And I nailed that buy order, as you can see here, at 49K or 50K, I think it went through. And I caught that swing trade because here, again, I'm watching resistance. Watching resistance there. So that's resistance, that yellow line. Ideally, you want to see a break above it. You want to see volume come in, which we have seen volume come in. Again, I want to see volume continue a lot higher, a little bit here to take this higher. But what we have seen that it bounced just below there, and that's, just above. And that's why I set my order just above there. And I obviously caught it at 50K, so it was about there. And it pumped currently up 80%. So that's how I like to use it. And if I just go back to Solana, and if I need to zoom out. So it was this here. So this is the bear market here. I'm just going to try and remember how I drew it. But this trend here. So we had macro support. and we were retesting this level for a long period of time. Like technically you could probably move that up to that wick here, which also aligns with a lot of liquidity levels here from the breakdown. So for me, this is where I loaded up a lot of Solana there because it is a higher low. Now, Easy obviously bought down here with fundamental, which again, you can use both fundamental and technical analysis to be a good trader. But what Easy obviously bought up a lot there, whereas I waited for a higher low and I saw a higher low here. Again, I had the fundamental understanding of what Ethereum had previously done as well. Let's mute that person as well. I had previous cycle experience that I knew what DeFi and what Ethereum could do as a blockchain, and Solana being cheaper and faster, and there was a lot of oversoldness here too. Like if you look at the CCI, like you can use CCI divergences, you can use RSI, you can use stochastic momentum. They all kind of show you the same thing, like over sort of sold territory or overbought territory. Like anything down here is definitely oversold territory, and likely we see a low, which is, as you can see here, the two big lows. Okay, it doesn't necessarily have to align, but it's very close. And that's how you get bullish and bearish divergences essentially as well. But also up here is when you generally see some tops in the market. So again, we saw a large top there. Okay, we came back down, right? So it is good to use multiple indicators to just see what's happening. But again, that's why I fundamentally understood where Solana was, and it set a technical higher low. So I aped into this bag here at about sort of 16 level, and then I rebought again here at this retest at $17 again. So it was again a higher low. So you had three higher lows on a macro time frame. This is on the weekly. And I was, again, your risk to reward here is very good. So you would have set your risk to reward would have been below that low. And again, I was targeting probably this liquidity here at 46. So even just a local trade, which again, I was buying it for spot. But look at that ratio. That's a 4.6 ratio, guys. So this is why so many traders get wrecked in the space, because they actually don't have risk to rewards. They don't have good entries. They don't have good exits. They don't have invalidation points. And that's essentially why it's so important. And that's why I try to do what I do to educate everybody about how to effectively trade and make consistent profits to compound your money. So yeah, I hope that makes sense. So just coming back here too, like again, Fibonacci works. So you could have had to take profit there at 99K, but I'd like to see again higher lows. So my invalidation would probably now be below 56. So I could probably set this limit order up a little bit higher. So if I come back to Pepe Boost, I'll set it at a little bit higher. So 0.0004, 56, I'll sell 100%. And then that'll still be, so that is in profit, right? So that's what I mean. Like that's why it's so good to have entries on these particular trades, right? Because again, that's already higher than where I bought. So that's what I mean. It's so imperative.
Question 6 focuses on how I learned to become a better trader, essentially. And my passion is for education in the space to essentially help onboard new people to trading, and also how to become a better trader in crypto so that you can change your lives as well. So I dive into a little bit about how I did study trading in the past, where I go to now as well, and those types of things.
Great question. Honestly, this is my third cycle. So I joined crypto in 2016. And it's more a few things that you learn. It's patience. It's waiting for price to come to you. It's trying to limit your emotions, and essentially the best way to do that is obviously experience, but then obviously having a trading plan. And that's why sticking to your trading plan, which also co-aligns again with patience, teaches you that what you like to do is ideally have those risk to reward entries, because if you don't have good entries, then essentially you don't have potential good exits. So it took me, I studied a lot of people. Like I'm sure everybody followed people like the Moon and what's the other fella from last cycle? The other fella, I can't remember his name now. Chris Crypto. So I followed them. They were pretty like bullshit sort of people. And then I've been following Crown Crypto for a long time as well. And he's more of a statistics-based trader. And what I love about trading essentially is that you can trade in so many different ways. And like I said before, people like OSF, he trades very much on a fundamental side, whereas someone like me trades very much on a technical side. And so both traders can succeed, and both can use a collaboration of both sort of strategies, but it is always good to just find your niche and those types of things. So I've watched, hundreds of hours of YouTube videos. I've traded, I didn't even know, probably tens of thousands of charts. And it's just through experience. I'd highly suggest even checking out some of those demo trading leverage on futures and just having a go with really low leverage, just understanding how charts work, liquidity, that type of stuff, and just listening and learning from other people. Like, so many of these LARPs in the space, like, they're just idiots because they don't, at the end of the day, they don't educate you or anything like that. And so finding people that work with you, and that's why I said earlier, like, the Bodogo community is so good. Like, I've bounced around with so many of these people in this group, and we've made a lot of money all together. And it's people like that you can bounce off reliably. Like, shout out to Sexy. Like, he is a fantastic futures trader. Like, he probably makes a lot of money trading futures. And so someone like him is someone that I can reliably go to and just say, hey mate, like, this is what I see in the chart. What are you currently looking at? And because he has a different sort of trading mindset, trading experience, I can sort of use his knowledge and then collaborate that with my knowledge to be like, okay, sick. That, like, this is what we will try and do, like, take a long here or take a short here. So it's experience. It's taken time, reading a lot of online resources like Investopedia, understanding how price and charts work, and then obviously just trading yourself over time. But yeah, I'm very much a visual learner, so that's why I spend a lot of time on YouTube.
Question 7 focuses on how I actually do some live trading. We try to find some live trades on BullX, but then obviously due to the macro bearishness at the moment, due to a lack of liquidity and people really selling a lot of meme coins quite early, I then dive into why essentially sometimes the best trades is to actually step off the charts and to not trade at all. And so I talk about liquidity and how that essentially is going to drive this market into parabolic price action at the end of the year. And then I talk about, again, some of the trading resources, processes, and tools that I use every single day to do my trading analysis.
So copy the contract from here. I then come to holderscan.com, paste it in there. Hopefully it comes through. Maybe it's not big enough yet. Maybe because it's on ETH. Is it not going to work? Let's see if it works on the Solana version. So I've got Kobe there. So it's not, it hasn't, so it does take time for these tokens to run up, but essentially let's just look at Kobe, for example, which was the one that I was on. Let's just look at MOG, right? So MOG, for example, is in a very big downtrend, which is technically a bull flag, but it's still a downtrend. But what you're seeing is holders step in. So new holders on 7 days, 3 days, 1 day, 12 hours, 4 hours. So that again, that is a fundamental standpoint where I then go, okay, there's new people stepping in, which means potentially new liquidity. And does that align with my chart? So again, I copped a lot of abuse because I shorted it and I sold up here at 600 mil. After I traded it from down here at 180 million, this low there. I traded from there to there. And because I'm a trader, I took a lot of profits up here, sold my whole bag. We shorted it in my group to about these sort of levels here at the 0.618. And then we longed a few of these bits here. And then obviously it broke down at the moment. And what I'm targeting, I sent through this long in my group earlier today. These are the levels. So this is a long-term macro support. So you got wick touches here from May this year. You could even say maybe it does align even all the way back there technically, which is kind of like shows me strength as well. But just showing you that it also aligns with that liquidity event that we saw a couple of weeks ago. So you could buy a spot here, but if you do want to leverage trade, which is what we do in my group, is I'm looking for the long here to ideally, I might need to move that up just a little bit higher to cover that. So I might have to move it up to 300 million. But again, my risk to reward here, right, is still the same sort of trade that I showed you before on Good Day, right, is getting in at these low fibs at anywhere between sort of these liquidity areas here, macro support with obviously fundamentals of green across the board of new holders. Plus, obviously, I already know that this is one of the strongest communities out there, hence the abuse that I copped. But essentially what you're seeing is that like this is a really good risk to reward trade. So I'd have my stop loss sort of below there. I could probably move that up a little bit to a line sort of below that low there. And then obviously I'm looking at a 4 risk to reward ratio of 4. So that means obviously if it goes down, I only lose 25%, but if it does go up to the 0.386 here, I'm making a risk to reward of 4. So if I do at the top to there, that's a trade on say 10x leverage. That's an 800% trade. So that's why it's always good to look at swing trades as well, guys, at the end of the day. But again, if I'm looking for new memes in the trenches right now, I kind of covered that just before. And again, I have recorded this, so I'll pop it on my YouTube. I'll do a bit of editing and I'll pop it on my YouTube and I'll drop it in the chat tomorrow. But essentially what I'm looking for here is no reds across the board here. I'm looking for greens. So you want to have dev under 5, which you can obviously set in your filters over here. So the ones I usually like to run with is at least one social, dev holding 5. Holders, I go 8, and this one here, if you are looking for tokens that are about to graduate, you can use tokens that are only under, like I usually go about 4 hours, is something to monitor as well. So as you can see, it refines a lot. We're currently seeing, I posted this early in the chat as well, if I just find it. We're seeing a lot less tokens being created. Is it going to work? Let's just see. Yeah, here we go. So we're seeing a lot more, and this is what you do. You got to dive on chain as well. So there's a lot to these processes, and a lot of people do think trading is quite easy. It takes a lot of time to understand how money ebbs and flows, how like the macro comes into it, and that's why you're seeing a massive downtrend in the amount of tokens that are deployed, and also tokens that are running up. You're seeing, like, if we come back here, literally look at this. Like, there are no tokens in the past 4 hours that have graduated. So that's quite bearish, right? So that these sort of signs show me, okay, maybe it's time to just step away from the markets to go back to something like this and just wait for price to come to my level where I buy it. And then again, this is on the daily chart, so this probably does take some time, and likely we could bounce from here and then retest this, and then maybe I'll take some profits there and then look to rebuy that higher low sort of thing. So it's like, this is the thing. A lot of people are like, oh, Greeny, can you just like do a trade? Let's get into some trading. I'm like, mate, sometimes you do have to wait for the market to come to you, or sometimes you have to wait until sort of price just gives you what you want, or the market is bullish. And we've been in consolidation for quite a long time, and I do think that Q4 is where we do start to see liquidity be injected. And I shared a tweet earlier today. I'll have to see if I can find it, about just global liquidity. Yeah, I'll try and find it on my screen. Here we go. This one here. So I wrote a big long post about like consolidation and summers and those types of things. But this one here, this is global money supply. So this is money supply, as you can see. And usually once global liquidity starts to increase, so this green sort of area, month-on-month growth, is when you start to see bull markets take off. So if we look at last cycle, you see this big green money inflow, you see the market move up, okay? You see an outflow, market moves down, okay? Same as last cycle, we saw money start to increase, we saw money continue to increase, we saw this massive, 2 cycles ago, we saw this massive inflow of price, we saw massive inflow of liquidity into the system. And this is from banks, this is from funds around the world, this is from like inflation going down and people having more money to work with. It's based on like literally worldwide sort of liquidity. And so as you can see, we're starting to creep up again. And as you can see, we saw an increase over the sort of late end of 2024, which is why we did go on that sort of run from about mid last year all the way to the top. And what we're seeing right now is that we are starting to peak again with more liquidity entering the system. So over time, as liquidity sort of like increases here, this is when you can start being a bit more frugal with your trades. You can probably be on the riskier side. So you could probably go to bed holding a few low cap tokens. Whereas now, no way I'm doing that. I sleep in liquidity. I sleep in Solana. That's it. So I hope that gives you insight into why sometimes the best sort of thing is to not, to actually sit on the sidelines and wait for a good price action, or a trade like this, like I showed you before, which you could have swing trade from there to there for a 2.2x, guys, if you caught that swing trade on G'day. So we're still setting higher lows, which is good. But again, like I said, a lot of memes are struggling at the moment because there's not a lot of volume coming in, and a lot of people just are still away on summer holidays. A lot of TradFi traders, a lot of hedge funds, they don't trade during the summer. They take breaks, they take holidays. So September usually starts to turn around, obviously being an election year, matching with the global liquidity as well. Then likely we see a really good Q4 in my opinion.
The last question, guys, focuses on my current take on where we currently are in the market and where I do think price action kind of heads, maybe in the short term, but also in the medium to long term, using both the total but also Bitcoin price action analysis.
Yeah, absolutely. So if you look, and it's always pays to take like a macro time frame. So I like Sexy, for example, he trades on 15 minutes on hourly candles, which I would love to do if I wasn't obviously traveling. But for someone like me who's more of a larger time frame trader, I like to use sort of the weekly, the daily to understand where the momentum is. And as you can see here, like we were quite, this is why like sell in March was a big factor, and why we haven't broken above those levels for a long time, because obviously liquidity hasn't entered. But more to the point, we literally ran from mid last year. Was it mid last year? No, October last year, all the way up here to 70K. And like, if like people are like, oh yeah, there's a few dips along the way. Like we went here, we dipped, we came here, but these are all very shallow dips. Like if you look at these guys, you will see that literally that I can't see it. I need to zoom in a bit. But essentially what I'm trying to say is all these dips here were literally, I think only like 20%, if that. So 22%. This one here was only, again, 19%. So if you look up, a lot of those were no more than 25%, whereas previous cycles, right, and this is probably the wrong chart. Let me pull up the index. Like if we look at last cycle, guys, this one here, you can see that we had many pullbacks that were a lot more aggressive. And obviously, like as price does go up, the pullbacks are going to be lighter because you are a higher market cap. But it is always good to see, like that was only 20%. Usually we do have sort of pullbacks that are a lot higher. I think this one up here was quite high. So these ones here, so that purple candle there. So maybe not, but what I'm trying to say is that you do see pullbacks usually about 40% during this consolidation phase here. The thing is, we have just obviously set an all-time high pre-halving, which obviously hasn't ever occurred. So consolidation now for a period of time, and letting these indicators come back down. And this is on a weekly. We're starting to reach areas where we do start to see sort of momentum turn back up into sort of mid to early 2025. So yeah, we are still in a bull trend. Where we would lose a bull trend for me is probably if we lose that support there. So if we do close, like as you can see, we wicked, and wicks aren't bearish. Closes are bearish. So if you see a daily candle close or a weekly candle close probably below this line, then likely that's where you start to get, I probably start to be a bit bearish if we did something like that. That's where I go, okay, yeah, it's more than likely that this is a sustained run quite deeper into the market. So for example, I'd go from about there to there. And then likely we target some really low fibs, maybe down here at 38K, which 38K does line up with some liquidity. So I mean, it's all like, oh man, I could talk your ear off about trading all night long. Hold on, let me find my other chart. I hope you're all enjoying this, but like this is what I mean. Like my mind is always so busy. So this is liquidity. So this is essentially where traders on futures markets, this is obviously on Binance where the most volume is worldwide. If I just close a few tabs, just to make sure it loads quicker. This is always good to keep an eye out because as you can see here, price likes to move on futures market towards this liquidity to wreck either people who are shorting or people who are longing. So that's why it's imperative that if you haven't used leverage before, that you learn to use leverage in the correct way. And that's what I try to do in my group too, is teach people how to leverage trade in the smart, consistent way. But as you can see down here, there's a lot of liquidity sort of in these sort of areas down here. So 42K has 5.7 billion. Those types of things. Let me mute. All right, there we go. Whereas like, yeah, so we still have untapped liquidity here that we haven't seen for a very long time. So more than likely we could, again, this is extremely, like smarter traders than me know what you're seeing here as well. Like this is untapped liquidity all in this sort of area here, right? So in theory, like a retest here of maybe this trend, but also maybe this 3.82 at 52 at least, if not this liquidity here that has been untouched, like we're here, like usually you want to see price sort of consolidate at least this wick here. So you want to see it come down here, sort of trend like this and then move up, okay, within this bullish sort of flag still, okay? But ideally, like you could still, technically price could still do something like this, come all the way down here, sort of bounce a little bit, come down here, still bounce a little bit, kind of like this. And technically that is still in a bullish flag, okay? And as I said, like, yes, we have broken that trend there. So maybe we are in a deeper pullback than a bull market would normally see, but ideally you're still in a bull flag, and a bull flag is essentially this, okay, so like that, and then consolidation, then likely has a high probability of breaking out to the upside. So yeah, I mean, like, there's so much that goes through my brain, but yeah, I mean, if no one else has any more questions, we might call it a wrap. So there you have it, guys. There's my tutorial that I did exclusively for the Badoggo community. If you like my content, please subscribe down below. Smash the like button as well, guys, because it helps the channel grow and I really do appreciate it. Don't forget to check out my trading group in the description below. And then obviously, if you'd like to support the YouTube channel just a little bit further, become a YouTube member and get early access to these videos. As always, guys, take care and I'll see you in the next one.